Facebook reported second quarter results tonight, and shares fell by about 3 or 4% in after hours. We're going to take a look at the results and the guidance that management gave and use our earnings model to figure out if this price move makes sense. Now, if you're new to our models, I'll just quickly walk through our approach. So we have two versions here. This version on the left represents the earnings model prior to the release, and this represents the new model that includes new estimates or new guidance from management and the second quarter results. So the way the model is set up is that anywhere that you see a blue cell, those represent our estimates. Purple cells represent management guidance, and orange cells represent consensus estimates among analysts. It's set up to have the GAAP and non-GAAP income statement at the top, and that is driven by the segment results. So you can see we have sales broken down by geography, monthly active user data, monthly active user growth rates, and average revenue per user. So what the model does is it takes the average monthly average users and the average revenue per user to drive the revenue details up above. And then there's some profitability ratios, which drive pretty much the rest of the income statement, and the non-GAAP adjustment details down below there. Now, if you're just going to use a multiple-based valuation approach, you'll really only need the income statement. But if you're going to use a discounted cash flow approach, we also model the full balance sheet and cash flow statement. So if you're not going to use it, you can just leave it collapsed so it doesn't distract you. But it is there if you want it. And we have the details of the discounted cash flow valuation. If you have any questions on these metrics, we have a 10-minute video that walks through how this valuation works. I'll just collapse this for now. So essentially what we've done is we've taken the results and we've plugged them into our model, and we're going to walk through exactly what it does to the valuation. So before we do that, we just want to point out a few of the kind of standout items. The monthly active users, I think that was a pretty significant item for this quarter. If we scroll down to the segment details, we can see that particularly in the US and Canada, where the growth rate breached 1%, and that's the first time that it has been above 1% for sequential growth in over a year. And then the other important item is that the average revenue per user in every region actually increased, and particularly in the US and Canada, it's now reached over $9 per user per quarter. So that is what was driving the significant beat. Now, there is a tab where we show the results after the earnings. So again, each one of these orange cells represent the consensus estimates, and you can see where the actuals came in. They beat on revenue, beat on gross margin, beat on operating margin, beat on net income, and beat on diluted non-GAAP EPS. So it was very strong results. I guess the question then is, why are shares falling in after hours? And there could be a few reasons for that. If we go to the transcript of the earnings call, and if you scroll down to the section where they talk about guidance for the rest of 2015, you'll see that they sort of started off talking about the year-over-year growth in revenue, that growth rate declining. So obviously not a favorable comment that you want to see when you start talking about the outlook. But if you take a look at what the revenue growth expectations were prior to the release, so again, this is the model prior to this quarter's earnings, you can see that the consensus estimates for revenue growth was already showing a declining rate. So that really shouldn't have been much of a surprise. The other thing that could be driving the decrease in shares is just the fact that shares were trading prior to the release at an all-time high when you look at the next 12-month consensus EPS based price-earnings ratio. So it might just be that people are taking an opportunity to take some gains here, and since it wasn't an unbelievable beat and an increase in guidance, maybe they're just taking some of the profits off the table. But if you look at what our model predicts, so now that we've had the chance to update all of the results, and you can see in here we've filled in the purple sections which represent management guidance. They did give some favorable guidance on the expense side, so that is going to help out with the valuation just a bit. So if we go back to the transcript, you can see they now expect GAAP expenses to be between 55 and 60% year-over-year growth rate for the full year, which is down a couple of percentage points at the midpoint, and non-GAAP expenses to be 50 to 55% versus 50 to 60%. So that's where all these purple sections are here. They also guided the effective tax rate to be consistent with the June quarter. They gave guidance for share-based comp and amortization expense, and then here's the year-over-year growth rate and expenses. So when we plug all that in, we end up with a 50-50 price target of $94. So that's 50% weighting to our multiple-based valuation and 50% weighting to our DCF valuation. And if we compare that to what it looked like in the model prior to the release, we go from about $91 to $94. So we're actually showing that shares should have increased. Nothing too stellar, not going to see a 20% increase, but it seems a little strange that shares have actually declined in after hours. And one other thing to think about is if you go to this tab that shows the estimates by analysts, so this is the consensus estimates and really the price targets for each individual analyst. And you can see there are a number of analysts on here that have buy ratings with share prices that are either at or below the current price. And even if they're pretty close or just above, in order to keep these ratings, you would think that these analysts will probably increase their price targets, because nobody would want to give a buy rating with a 1% expected appreciation in share value. So we probably will see a number of upward revisions to price targets when analysts release their reports later on this evening. Alright, if you'd like to download this model, please visit our website, www.gutenbergequityresearch.com. You can click on the Models in Focus to find additional details for how it works, or you can click on the Model Store and scroll down to the Facebook model and download it for just $5. And be sure to check back later this week after the consensus estimates are in. We'll recalibrate this model to realign with what the new estimates are after this release. Thanks for watching.